Ladies and gentlemen, good evening and warm welcome to all participants to the quarterly and full year update call of Star Housing Finance Limited. Star Housing Finance Limited had organized this conference call with an intent to share updates and discuss operational as well as financial highlights of the company for the period ending March 31st, 2025. On the call, we have the senior management comprising Mr. Kalpesh Dave, Director and CEO of the company, Mr. Natesh Narayanan, CFO, and Mr. Anup Saxena, Chief Operating Officer. Before we proceed with this call, I would like to take this opportunity to remind everyone about the disclaimer related to this conference call. Today's discussion may be forward-looking in nature based on the management's current beliefs and expectations. It must be viewed in conjunction with an risk that our business faces that could cause our future results, performance, or achievement to differ significantly from what may be expected or implied by such forward-looking statements. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Without further ado, I would request Mr. Anup Saxena to address the participants. Thank you, and over to you, sir.
Thank you, operator. Welcome everyone to the earnings call by Star Housing Finance Limited for the fourth quarter and full year ending March 31st, 2025. We are happy to have you join us today as we review the operational and financial performance for the year ended 31st March 2025 of Star Housing Finance Limited, providing insights for the year. Following the management remarks, we will be eager to address any questions from our participants. Star Housing Finance Limited is dedicated to extending home finance to first-time home buyers in semi-urban and rural areas, focusing on economically weaker and low-income families. Headquartered in Mumbai and listed on the Bombay Stock Exchange, we serve 6 states and National Capital Region, which is NCR, through 35 plus locations and a team of 250 plus housing finance professionals specialized in low-ticket housing finance space. Coming to the performance for the period year ending March 31st, 2025, I wish to state the following points. Throughout the period, Star Housing Finance Limited extended housing finance assistance to a number of families from the economically weaker section / low-income housing group. Our asset under management has reached 520 crores plus, marking 22% year-on-year growth. Our asset portfolio is predominantly retail and well diversified across the regions where we operate. The average incremental loan size stands at rupees 12 lakhs in semi-urban areas and rupees 8 lakhs in rural regions. We have cumulatively served more than 6,500 individual home buyers in our operational geographies since inception. As our portfolio expands, we maintain a focus on asset quality. Our gross NPA and net NPA ratio as at 31st March 2025 stands at 1.84% and 1.40% respectively. We are committed to enhance our operational capabilities through investment in human resources, branch infrastructure, and technology. Our focus remains on scaling up our asset under management through both on-book and co-lending participations through our strategic collaborations. We executed first direct assignment transaction, which is a testament to our sourcing, processing, underwriting, and receivable management capabilities. Under the leadership of our Chief Financial Officer, Mr. Natesh Narayanan, Star Housing Finance Limited has successfully secured credit lines totaling approximately 170 crore rupees from various banks and financial institutions during the period. Our core focus continues to remain on providing retail credit access to first-time and new-to-credit home buyers, empowering them to realize their dream of home ownership. With this, I now call upon our Chief Financial Officer, Mr. Natesh Narayanan, to speak on the balance sheet and profit and loss and financial ratios for the period ending 31st March 2025. Thank you, and over to you, Natesh.
Thank you, Anup. On behalf of Star, I extend you all a warm welcome and thank you for joining us on this analyst call. For the financial year 24-25, we secured a total incremental sanction of 210 crores from various banks, NHB and financial institutions, of which the 40 crore sanction from NHB still has not been disbursed and it's available for use in the current financial year. With this, I also share the full year's performance for the year ending March 31, 2025. The asset under management stood at 520.7 crores as of March 2025 as against 426.86 in March 2024, thus registering a year-on-year growth of 21.98%. Disbursement for the year FY'25 stands at 148.6 crores. The total income for the financial year 25 is 94.96 crores as against 61.64 last year in FY'24, a year-on-year growth of 54%. The net interest income in FY'25 stands at 32.94 crores as against 26.13 in FY'24. GNPA as on March 31, 2025 is at 1.84% and NNPA at 1.5%. For the period ending 31st March 2025, PAT increased by 25% year-on-year to 11.11 crores. During the period, the company received a total sanction of 210 crores, 210 crores from banks, NHBs and our various other lending partners. The total borrowings as on 31st March 2025 stands at 403.81 crores, giving us a leverage of 2.81 times. The liability profile, the liability plan and the pipeline is robust and strong to support the growth initiative in the ensuing financial year. I'm also happy to state that in the last financial year, that is FY'24-25, we successfully closed a direct assignment transaction to the tune of 55.83 crores. With this, we thank you all for all the support that you have extended during the day, and I hand over this call to Mr. Kalpesh Dave, our CEO. Thank you.
Thank you, Natesh. Am I audible? Operator?
Yes, I can hear you.
Yeah. Okay. Thank you. On behalf of the Star HFL team, I extend a warm welcome to all our participants. At Star HFL, we see ourselves as part of the broader low-ticket retail housing finance ecosystem that enables the credit access towards home purchase that is end-use driven for deserving borrowers in economically weaker section and low-income group customer segment who reside in extended metros, semi-urban and rural locations. Alongside banks, HFCs, credit societies and other lenders with whom we coexist, we aim to widen credit access and contribute to the Housing for All vision, targeting housing shortage, 95% of which emanates in the segment that we operate. Over the year, we continue to search for new avenues of growth based on demand and remain committed to asset quality and disciplined operations. Our commitment remains steadfast in cultivating a quality AUM book. Star HFL has navigated a challenging year for mid and small institutions across the retail lending space. The year saw tightening on the liquidity front and also muted activity on the capital market space for such players. However, we have continued to register incremental growth on the AUM front thanks to our strong liability machinery led by our CFO Mr. Natesh Narayanan and the resultant disbursements. We have also been able to successfully execute our very first direct assignment, which shows our ability to create value from portfolios so created till date. We have stayed put and focused on maintaining asset quality, invested in strengthening the network by addition of quality manpower, and continued to search fertile micro markets throughout the year. We look ahead to FY'25-26 with optimism and build the bearings across the balance sheet that would enable scale-up as envisaged. In conclusion, we extend our heartfelt thanks to all stakeholders, including the RBI, the NHB, the Ministry of Corporate Affairs, our banking partners, rating agencies, business associates, valued customers, dedicated employees, and their families. Each has played a crucial role in the development of Star HFL franchise. As a committed and responsible lending organization, we are dedicated to creating value for all our stakeholders. Thank you, and over to you, operator.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets only while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. I repeat, if you wish to ask a question, you may press star and 1. We have our first question from the line of Ashish Kumar.
Hello.
Yes, sir. Please go ahead.
Thank you, operator. I wanted to ask, which are your major operational geographies? Any new geographies you are planning to expanding in this current financial year? And could you throw some light on the direct assignment that you have done in financial year 2025?
Anup, you want to answer on the new geographies, the geography that we operate, and Natesh will answer on the direct assignment.
Yes. So, Anup Saxena this side, I will take the first question, followed by the second answer will be provided by our CFO, Mr. Natesh Narayan. So in terms of the major operational geographies, majorly we are, as of now, if you look at our data cuts, majorly we are present in the geographies of Maharashtra. In Maharashtra, we are operating through 3 centers, which are based out of Mumbai, Pune, and Bidar, which is majorly regional headquarters is based out of Akola. In and around Akola, in and around Pune, and in and around Mumbai, these are our major operational geographies, followed by Rajasthan, further followed by Madhya Pradesh, Gujarat, National Capital Region, which is called as NCR, in and around Delhi and Ghaziabad, and Tamil Nadu. So these are our major geographies wherein we are present as of now. In terms of future expand in terms of geographies, we are planning to go deeper in the geographies of National Capital Region, again, which is Uttar Pradesh, Tamil Nadu, and of course Maharashtra. So these are our new geographies where we are banging upon to go more deeper in terms of geographical presence. Natesh, if you can take the second one.
Sure. So as far as the direct assignment goes, this is our first direct assignment transaction, which is a very normal kind of transaction for a large HFCs. But for this specific transaction, this is our first. This gives us a lot of benefits in the terms that, 1, it improves our ALM in a very big way. 2, it validates our credit underwriting processes because the counterparty to the direct assignment has validated our credit underwriting standards before doing the transaction. 3, this gives us enough firepower to do disbursements for the coming quarter, that is the Q1 of this financial year. 4th, of course, it improves our balance sheet in a very significant way. So all in all, these are milestones from a perspective. So first we started with NHB, then we added new lenders, we then did a NCD. The direct assignment is one of the significant milestones which will improve the growth prospects going forward as times roll out for this setup. I hope that should be enough. Anything more, I'll be more than happy to clarify.
Okay. Thank you. Thank you so much. Thank you.
Thank you. A reminder to all participants, if you wish to ask a question, you may press star and one on your touchtone telephone. I repeat, if you wish to ask a question, you may press star and one. We have our next question from the line of Ketan Kataria from Ketan Kataria and Associates. Please go ahead.
Good afternoon, everybody. First of all, congratulations Star Housing team on the strong FY'25 performance. Regarding the announcement plan to list on NSE, could you provide more details on the expected timeline and the strategic objective behind this move? Additionally, what steps are being taken to ensure a smooth process?
Hello, Ketanji. Kalpesh Dave here. I will answer this question. So yes, we have been, telling in our earlier conference calls as well that, we intend to transition to the NSE, subject to all qualifying criteria being met. While I, am not the authority to definitely tell you that, we do qualify, but we do feel that, one of the impending criteria, which is, 75 crores net worth for 3 financial years, that is something which we were looking to attain, which we have attained given our results that got announced yesterday. And we do feel that at the right time would be definitely this current financial year, which is FY'25-26, where we should aim for a transition. To that effect, we have got the approval from the board as well to explore whether we can see the transition happening, subject to obviously all approvals and necessary regulations in place. So just to give you a sense of it, definitely during the current financial year, somewhere maybe in the latter half of the year, we would explore, we would see if we indeed do qualify to get transition to the NSE, and to that effect, we will look forward to appoint a merchant banker and put up a formal application to that effect, sir.
Excellent.
I hope that answers the question. Yeah.
Yeah. So what the strategic objective behind this move? You might have earlier said, so how it will help the growth of the company?
See, strategic objective, I would say that it's a very natural progression for a listed company on the main board of BSE to get transitioned onto the NSE platform. I think that comes very naturally. And once you go transition, there is definitely more avenues that get available to you. This is what we do feel in terms of capital market activity. And currently the net worth and the liability position is good enough. Leverage levels are also pretty much modest, but our vision, if you ask me, is to have a 2,500 crores of loan book, and I'm not giving any guidance over here, but that's what we have resolved in our earlier calls also, that in next 3 to 4 years we should look forward to become a mid-sized housing finance company with a reasonable presence across major centers in India. So for that, raw material is money, and to have a good leverage, you need to have a good capital base. So definitely going towards the NSE, one may explore raising having a good capital level from the current levels, and obviously that again all depends on all the requisite approvals from the board, from the shareholders, and from the necessary authorities. But that gives us a good avenue to ramp up the way we have envisaged in our overall interaction with all the stakeholders that we have said. So we are looking forward to it, sir.
Yeah. Thank you, Mr. Dave, for answering. Thank you.
Thank you, sir. Thank you.
Thank you. We have our next question from the line of Vishal Jaiswal, an individual investor. Please go ahead.
Hi everyone. Happy to hear the good work done. I wanted to ask at portfolio level, what is the average LTV on the organization? Second thing, what efforts you have taken for digitalization of the process? Thank you.
Yeah. So hi, Anup Sachin this side. I will answer both the questions. So, Vishal, at portfolio level, so as an organization, we offer, at the time of origination, we offer maximum LTV 80%, whatever product it is. So in layman terms, at against 100 rupees value of the property, we offer up to 80%, wherein, as per statutory, as per regulatory guidelines, we can go up to 90%. But looking at the kind of segment we are operating, the kind of geographies we are operating, at the policy level, we chose to keep loan to value ratio at 80%, which is maximum at the time of origination. Whereas if I'm talking about loan-to-value ratio at portfolio level, then at company level, at portfolio level, we are operating at 55% LTV, which typically means that against 550 crores AUM, entire AUM of 550 crores is secured by way of approximately 1,000 crores of asset covered as a security. So that is to answer your first question. In terms of to answer your second question, in terms of digitization, Star Housing Finance Limited was all keen to improve and provide in terms of digitization. During last financial year, we invested approximately 1% of our gross revenue for enhancement of our software and enhancement of our core loan origination system and core loan management system. As of now, Star Housing Finance Limited is 100% at digital mode. That means my customer journey starts at digital footprint without any manual intervention, followed by every sort of verification, every sort of checks and balances, every kind of maker and checker processes, and ends at digitally without any manual intervention. So right now, no company, if you are invested in the company, is able to operate 100% digitally without any manual intervention. So, and furthermore, subject to approval from board and other stakeholders, we are further keen to invest more in the technology platform. So that is to answer your second question. I think I'm able to answer you.
Thank you for the answer.
Thank you. A reminder to all participants, if you wish to ask a question, you may press star and one. I repeat, if you wish to ask a question, you may press star and one on your touch-tone phone. We have our next question from the line of Vikas Kasturi from Focus Capital. Please go ahead.
Hello, sir. Sir, I have quite a few questions. So one is, I noticed that the disbursement for this financial year was much lower than what we disbursed last year and the year before that. So one is, please throw some light on that. Then the second question is, our GNPA numbers have actually gone up again over the last 2 years, and it has also gone up significantly over quarter 3. So again, please throw some light on that. And the next one is, it's a sort of an observation, sir, and a request that, see, we have been having investor calls every quarter, and we did not have one last quarter. And so, my request to you is that please, for continuity's sake, you please have this call on a quarterly basis, because it also signals that, the company is continuously engaging with us. Normally what we see is that, companies go into a shell when the bad times start, right? So that is when they stop having all investors related conferences and so on. So to signal that there is nothing happening in the company and everything is status quo and we are improving and growing as a company, so I request you to have this kind of outreach every quarter. And along with it, the presentation that you have put out, you didn't put it out this quarter, but last quarter. Again, I request for some more granular information, like, for example, for example, the previous participant asked the loan to value ratio. So you could provide information like that. What is the loan to value ratio? What is the ratio of new to credit customers versus customers who come with some sort of CIBIL score? And the more granular kind of information. So it just gives somebody who wants to know more about the company more details about it. So this is what I wanted to convey, sir.
Sure. Thanks, Vikas. So I'll take this question. Disbursement lower, yes, definitely the disbursement has been lower in the current financial year, and that comes from the heels of liquidity tightening that basically was observed. And in my speech also, I have said that, there has been a tightening of liquidity that happened in the, it started in Q2 of the last financial year and well into Q3, Q4 as well. And that tightening was observed not just at Star Housing Finance, but across those players who are...
Excuse me, sir, I'm not able to hear you clearly.
Am I audible now?
Yes, sir, you are audible.
So what I said is that disbursement lower, yes, definitely disbursement has been lower. That comes on the heels of the liquidity tightening that happened, that started in Q2 of the last financial year and was well entrenched in Q3, Q4. And I have said in my speech also that there was a tightening being done by the banks and the NBFCs, while the big players might not have gotten affected that much, or, in fact, they would not have experienced any kind of a heat for that matter. Having said that, smaller and mid-sized HFCs did get that feel that kind of heat on the liquidity side of it, and hence the disbursements were affected. And you will understand and appreciate that for any housing or any lending company for that matter, H2 is very critical. H2 is where the ramp up happens. In H1 you build up the capacity, and in H2 basically you fire on all cylinders. So that firing could not happen, unfortunately, for us. And we are a part of the overall, fraternity. So we are not the only one who got affected for that matter. So that's the answer to the first question. GNPA number increase. I would tell you, that's a numerator denominator effect also that has come into place, given that we have executed a 55 crores DA transaction. That basically reduces our overall base, and hence that number basically looks increased. However, having said that, that is one part of it. Second part is the seasoning of the portfolio that basically we observed. Some of them, in fact, I would go on to say that, none of them were systemic in nature. It was one-off incidents that happened, in some of the regions that we operated. Those, slippages that were there, that has been addressed in the month of April, and we are back on track for that matter on the GNPA number. So that's what I would want to tell you on the why this number looks a bit elevated. Third, why we did not do the earnings call in the last quarter. See, you have to understand, because we were in the silent period at that point of time, and hence we did not want to come out for that matter in terms of the numbers. However, we did post the numbers and we did post the presentation for that matter. Once we came out of it, we are more than happy to interact and engage with all the stakeholders the way we are doing it right now. So that's the answer to your third question. And the fourth question, definitely this quarter presentation will be getting uploaded onto the company website. In terms of drill down, we will try to put in more details as well. You are more than welcome to come on to our office and have a one-on-one with any of the leadership team, and we will give you that kind of granularity which you need in case you don't find it in the presentation.
Great, sir. And sir, if you could just throw some light on, since you talked about the GNPA numbers. So what is the pattern that you noticed, like 0+ DPD versus the 90-day DPD? So is there like could you just throw some numbers, sir, if it is something that you can share?
No, so there is no pattern as we saw it. As I told you, there were some of the regions. For example, there was some kind of slippages that we observed in the Vidarbha region. More specifically, if I talk to you about the location, it would be Buldana for that matter, which we found that kind of slippage. Some of the slippage happened in the rural areas adjoining the Udaipur office, and these accounts were seasoned. It has a vintage of more than 6 to 7 years, even long before the company went on the trajectory which it has envisaged. So these are the two locations where we kind of saw some of the slippages happening. Just to tell you, on the Buldana front, we have been able to get back on track. Hopefully, we should be able to resolve it completely, in this if not in this quarter, then in the next quarter itself. And rest of the locations are on track. So, I don't see any kind of an issue in terms of the, slippages as you mentioned.
Okay. Sir, if I may ask, pardon my curiosity, sir, I'm also a shareholder in the company. My question was also that how much of the NPAs is contributed by the legacy book, sir? And I mean the pre-housing finance days, whatever the business we had. So how much is that contributing to the NPA? Some light on that, sir.
Anup, you want to answer that question? How much was from the legacy and how much from the new?
Yeah, sure. So, approximately 70% of our total gross NPA numbers are coming out of legacy book. To drill down more onto legacy book, so if you are aware about our journey, more than 60% of legacy book which we inherited at that point of time, we as in the new management team inherited at that point of time, back about 5 years back. Approximately 60% of that book has been run down, partially paid or fully paid. So that is there, and we are by going more down on that book, we are sure that in a year or so, in approximately 3 to 4 quarters, we will be able to completely close that book.
Okay. And you're saying that is the book which is contributing to the majority of the NPAs, sir?
Yes, that's right.
Okay. Sir, again, because I also study other companies and they put out their presentations. So there is at least one company which, for example, has had similar issues with legacy book and so on. And then they actually provide that what is the NPA contribution from the legacy book versus the new book, which is more, which has better underwriting standards and so on. And then as an investor, you get a granular view of where the NPAs are coming from. And it also tells you that, okay, the pain will remain for, let's say, 4 quarters more or 8 quarters more or whatever. And then you will start seeing the rundown of the legacy book and the new book taking over. So that kind of communication and clarity is presented in the presentation, sir. So I would just request you to sort of give us also that kind of clarity. It would be very helpful.
Point noted. Thank you.
Thank you, sir. I'll come back in the queue. Thank you.
Thank you. We have our next question from the line of Prathamesh, an individual investor. Please go ahead.
Okay. Thank you, team, for the update. I have 2 questions. First, what are your portfolio at a risk number and how do you see them panning out in current financial year? And my second question is, can you tell me something about your ALM profile and liquidity for the year ahead? Thank you.
Yeah. So I will take the first portfolio risk question. Second question will be answered by Natesh Narayan, who is CFO of the company. So currently, our portfolio at risk is at sub 5%, which is well in line with the industry standards. There is a slightly higher as compared to last quarter, but that increase is on account of, as detailed by Kalpesh Dave, that is because of one certain pocket wherein we have seen some sort of issues. Those issues have been captured, and you will see better portfolio at risk numbers in the upcoming quarter. So that is on the update on the portfolio at risk front side of it. And so Natesh, you would like to give some light on ALM?
Hello. Yeah, Natesh here. On the ALM side, we'll be happy to state that all individual bucket are meeting their respective there are no negative gaps till 3 years. That's the first point. Second, the fact that as we start the year, we are sitting with the undisbursed sanction. The sanction that we have received that we have not disbursed from NHB, that is there. So, and besides the fact that the direct assignment gives us a good, clear runway for the next 3 to 5 months of clear disbursement runway. So ALM is robust. It's it's in a very good position to take care of our liabilities. Our cash position as in our liquidity position is good enough to take care of our disbursements as well.
Okay. Yeah. Okay. Thank you. Yeah. Thank you.
Thank you. A reminder to all participants, if you wish to ask a question, you may press star and one. We have our next question from the line of Anil Rajban, an individual investor. Please go ahead. Mr.
Yeah, am I audible?
Yeah.
Yeah, I would like to thank the management for the update. So my question is, do you have any intent to have any inorganic growth in terms of buyout or anything else?
Santosh, would you like to answer it?
Yeah. See, we do not have that kind of intent as of now. You have to understand that we are investing in capacity creation, be it physical infrastructure, manpower, or technology for that matter. Okay. So the thought process is very clear to have an organic growth through our branches. This company is yet to have an operational leverage getting kicked in. So we are pretty much focused on developing that kind of operational leverage, which would see increase in productivity, improvement in productivity levels, and hence whatever funds basically that we receive, that would be deployed towards creating a fresh book, organic book, rather than having a inorganic kind of a thing. So not on cards at this point of time. Thank you.
Thank you. As there are no further questions, on behalf of Star Housing Finance Limited, I thank everybody for attending FY 2024-25 earnings call. In case of any further queries, please do get in touch with Star Housing Finance Limited Investor Relation Desk. Thank you and take care. Bye.